Okay, so that's me, Jeff Astor, the name at the bottom at least. That's a book I've written. You can download it for $2.99 in Amazon, or print it out for get a print copy for $8.99. It's really 5 years of experience in this field, talking to literally 10,000 or more clients, or contacting clients over the past 5 years. This is what I do during the day, and really hearing so many interesting stories. It happened to be I really enjoy the process of talking to people, hearing about the retirement concerns and hopes and celebrations, and sharing, what we may be able to do more often than not, and helping them, really do much better in what they've in their retirement, both in terms of what they're making and and in terms of security for the future. And that essentially revolves around something called the self-directed IRA. So self-directed IRAs, there are two types, but the whole concept of self-directed IRA actually was questioned in the 1990s, and it came to the Supreme Court ultimately. And until then, people thought you had to keep your retirement money at one of the brokerage houses, for instance, or in some sort of direct custodial hands, without the person, the retirement owner, being able to self-direct. And then it came to the Supreme Court in a case called Swanson versus Commissioner, and by the year 1996, 2000, the Supreme Court ruled that, yes, not only are self-directed IRAs, as we'll discuss here, are legal, but they actually always were legal since 1974, when the whole concept of IRAs came into existence. We're also going to talk about the fact that there are two fundamentally different types of self-directed IRAs: a custodial IRA, where your money is held by a custodian, by a third party, and a checkbook IRA, which gives you the ultimate freedom, and in terms of real estate, it's almost a no-brainer that is the way to go. Unless you're buying raw land, or unless you're investing in a developer like Nate's Home Invest has that opportunity, all different opportunities, and all the opportunities that the Home Invest offers, you can use with a self-directed IRA. The question is, might it be better with a checkbook plan, with a custodial plan? Broad Financial, we really truly are an industry leader, and one of the things that makes us such is that we offer both. Generally speaking, you go out there and you find the few of the self-directed companies out there, they're either custodial plans, or maybe they're offering a checkbook plan, but no one else, to my knowledge, is offering both. So, which means that if someone calls me up and I hear their situation, I can advise them to one or the other. I'm not trying to sell them what's best for me. I can certainly offer them what's best for them. Anyway, that's what a self-directed IRA is. And it's not a term, because so often people call us up, they think self-directed IRA, oh, I have one already. I can buy all the stocks, bonds, and mutual funds at my Schwab account or Fidelity account. And that's the term that the brokerage industry uses sometimes. But we mean something much more than that. In short, the world of stocks, bonds, and mutual funds is, to us, a bit of it's limited. It's very limited. What if you don't? What if you're not getting great returns? What if you know about real estate and a bunch of other ways, or potentially other ways of making more money than what's being offered in the market? Or you want something that gives you more security, like actual real estate. So that's what we mean by self-directed. Truly self-directed means the ability to go beyond Wall Street, to go beyond stocks, bonds, and mutual funds. And that is really what self-directing is all about. Now, let me go through my screen here a little bit. And I think this is the bottom line of what there are lots of different things. Nate had asked me when we were discussing preparation of this, what's the one thing that a self-directed IRA offers people? And it offers a lot of things, and I could have answered a lot of different things. But I think one of the things is total control. We often, this type of plan, the checkbook IRA, has different names. They're really all the same thing: a checkbook IRA, an IRA LLC, and then there's also something called a checkbook control plan. Then checkbook control means now that through the vehicle, and we'll discuss this also, of a specialized LLC. And by the way, when I say IRA today, I also mean any type of retirement plan. It's just IRA is the most common, but we have something called a solo 401k, which hopefully we'll have time to discuss a little further. But when I say IRA, self-directed IRA, I mean it in a generic sense. Everything I say about the self-directed IRA is true about its solo 401k, which could have certain advantage. But in either case, both types of plans give you this control, this total control. That means your money is not held by a third party. It's not held by a custodian. It's in your hands, ultimately at a bank of your choice, ready for you to write a check or to wire money to an investment as you see fit. When your money's in the hands of a custodian, two things. We get calls all the time from people that are with custodians and now finding about a checkbook option. And typically they have one of two complaints. Either the custodian is charging all these fees, asset-based fees, percentage of your assets, or transaction fees, every time you need a check they're charging you. And these fees are adding up and they didn't realize that there were all these fees. That's one typical complaint about a custodial plan. The other complaint is that even if the fees are okay, it's the lag time between what they needing a check and getting it. In a custodial plan, you have to call them up and they have to wire you money, or they have to send out a check, and maybe they sent it out to the wrong address or the wrong amount or the wrong name. And if they sent it out all correctly, maybe it took a week and you had a late bill, the utility bill to pay, and it's late now you have a late fee. Or maybe it didn't come in time. Maybe you had a deal on the table to close on a property, and in a custodial plan it took an extra week or 2 weeks because you didn't have the money at your control, in total control, with the ability to just write a check on the spot. But in the checkbook plan, that's not a problem. You have your money at a bank. It does take, we'll discuss, 2 to 3 weeks to set up typically. A little slower now, end of the year type stuff, but typically 2 to 3 weeks. And faster with a solo 401k, by the way. But once it's set up, now you don't need us. You don't need a third party. No, by the way, one of the nice things about Broad Financial is that you'll always have access to our customer service to have questions. You learn a lot from my book and the materials we'll send you, but if you ever had a question, you'll have a live person to talk to or email with. So you're using the plan properly. But if you didn't have a question, you understood what you're doing, you don't need us. You would be able to just take out your checkbook, write the check, or wire the money for everything, from the big purchase of a property to the little utility bills and repair bills and property tax bills that you might have. So this is what we mean by total control. It really is in your hands. And other than the few rules, which we hopefully will be able to get into, really it's almost wide open and within your control to do everything. So this screen says, here's the two real advantages of the checkbook plan. Real time, meaning you don't have to go through a third party and have delays. And no fees. What that means doesn't mean no fees, no transaction fees. We'll discuss, there's a one-time setup fee, it's flat, and there's a yearly fee, it's also flat, paid quarterly. But when we say no fees, no transaction fees, you can write as many checks, you could have billions of dollars. I had a person that had a lot, that did very well in real estate, and his custodian was charging him thousands, even tens of thousands of dollars per year. And in our plan, once it's set up, it's under $200 per year. On the solos, even less. So that's control. That means you have time completely. There's no delays, no lags, and control in that you know what the fees are. You're not worried about a fee schedule. By the way, that's a hint. If someone is offering you a custodial plan, they have what's called a fee schedule. In a checkbook plan, there's no fee schedule. It's just a flat setup, flat ongoing fee, and doesn't matter again how many transactions and how often or how much money you're making, how much money you're holding, because the custodian is not holding it in the checkbook plan. It's transferred really to the IRA, LLC. Now, what can you invest in? So, obviously we're here with a real estate seminar. Home Invest is fantastic. We've done some business with a number of clients and helped Home Invest people get invested in real estate. But in the checkbook, in a self-directed IRA, again, checkbook or custodial, the rule is that you can invest in everything but collectibles and life insurance. Collectibles are things like antiques. Life insurance is actually, well, that's not getting into that, but everything but life insurance and collectibles, and we'll see also there's prohibited transactions. You can't, for instance, buy a property with your IRA that you already own personally. We can discuss that. But just some examples. What can you invest in with a self-directed IRA? Real estate. I'm going to do this a little quickly. Raw land. Raw land is classic. Maybe you might be better with a custodian. Basically, you're buying the land, and in 10 years from now, it'll hopefully appreciate. I actually spoke to a guy yesterday, believe it or not, who bought a piece of raw land for $4,000 10 years ago, and recently he sold it for $375,000. nice return. And now but he didn't do that with an IRA. Now that he did so great with his IRA, with that, he wanted to use a small amount, under $10,000 in his IRA, buy a piece of raw land and hold it. And in 10 years from now, if he sets it up as a Roth, meaning we'll learn about that also, a tax-free plan, he would have made, you know, $375,000 with that tax-free. And if he set it up with a traditional IRA, he would have made $375,000 tax-deferred. We'll talk more about that. But raw land's another option. Houses you could buy, right? You can buy not for personal use. We're going to talk about that, but investment houses. Lots of people using that. Our plans for that. Condos, again, investment condos. You're not allowed to live in the condo or the house, even for a night, even to spend a night there. But if it's for investment purposes, the plan is great. Foreclosures. You know, people, and often in foreclosure situations, sometimes you need some money you need access to your cash on the spot, like at an auction, and that's what a checkbook plan does for you. A custodial plan you would not be able to do, have the availability to make a deal or win a bid and give them some sort of payment on the spot with your IRA. That you need a checkbook plan for. Office buildings, people buy $1 million. You know, people using millions of dollars to buy buildings. Just by the way, a common question is that if you buy an office building and you just want to use one of the offices for your business, like you have 1,000 offices, and you just want to use one little of those offices for your own personal business, can you do so? And that's a common question, and the answer is unfortunately no. The property has to be 100% for investment purposes, no personal use at all. But people are buying office buildings with their IRAs using our plan. And then, so that's we're going to come back to the real estate, but what else? So as Nate mentioned, cryptocurrencies. You know, you can't just buy the Bitcoin and the Ethereum on the spot these days in an IRA. Or in any plan, you have to learn this whole thing about cryptocurrencies and exchanges. That's another conversation, another webinar. But our plan allows people to purchase any crypto. There's over 1,300 now, and growing, and whatever comes out, they'll be able to use our plan to invest in. But that's the world of cryptocurrencies, a whole universe unto itself. Precious metals. Until the cryptocurrency craze this summer, the second most, after real estate, the second most common purchase of our use of our plans was precious metals, gold, silver, platinum. And one of the nice things about the checkbook plan is that while normally, the plan allows you to buy precious metals and keep them at a vault. You know, we use the Delaware Depository, for instance. But if you wanted to actually take physical possession of the gold and the silver, you can do so with our plan in terms of gold or silver or platinum American Eagles. Anyway, that's precious metals. Also another conversation and world unto itself in the self-directed world. Loans. People make all types of loans. This is a really nice thing for people in the real estate world. You know, people are just, sometimes the real estate may be too expensive in their area or whatever concerns they have, but you can use their IRA to make private loans, hard money loans, bridge loans. That's wonderful. So, you know, I have a guy that's making quite a bit of money out in California, actually just make loans of 6 months or less to people at nice interest rates with his IRA. And again, if it's a Roth IRA, the interest comes back to him within a 6-month time frame, maybe 10, 15% tax-free, or even if it's tax-deferred, it's still an advantage. So the loans is another common usage of the plan. And really, you can invest in almost everything, anything. One of the nice chapters in my book here, we call them exotics. What are different exotics, things that you can invest in? So again, the classic is real estate. The second classic is precious metals. The hot thing currently is cryptocurrencies, but tax liens, hard money loans, private businesses. You can invest in private businesses. That's all there. But then there's something called exotics. So I have a guy investing in Arabian racehorses. It's one of the exotics. I remember we had the conversation, and I forgot if he kept me on the phone or I kept him on the phone. He told me all about the world of racehorses, and they were, you know, when you buy a horse and it's born and it's a thoroughbred, but you'd spend 2-3 years raising it. I learned a lot about. I forgot most of it now, but it was very interesting. You know, that he told me about Arabian racehorses, and yeah, sure, you could use our plan for that. Hollywood films. We had one lady. She called up. She's a Hollywood film producer, and she wanted to try and get people to invest in her film. That's a perfectly legitimate use. Treasure Parks, another fellow here, one of the people in our department here, someone wanted to buy a part of an island where they buried treasure, and people paid to come to the island and find the treasure. And yep, the IRA is something that you could use to do so. Timberland actually is not so uncommon. People buy the land not to buy property, not to develop into property, but to buy timber, to cut down timber and then sell the timber, and that's also legitimate use of our plan. So before I go forward, it's interesting. One of the big recently I was telling someone about exotics, and he told me he had something. If we wondered if he could do it with our plan. He's actually he had an LLC. Someone had an LLC that tracked the earnings of 360 supermodels. I don't know. It somehow was connected to their social media ratings, but basically there was some sort of rating, and he was being offered to be able to get into 10% of this LLC. So every time the LLC, these models became more popular, he would get a nice dividend or whatever. And the answer is yes, he could, and he did. He signed up, and he's using our plan to invest in this supermodel LLC. So really, almost anything goes. Again, other than collectibles and life insurance, and other than these things called prohibited transactions. Now, which it's pretty much a wide open world. And just to be sure, people get confused about this term called prohibited transactions, which is an IRS term for things you can't use the plan for. And really, the details might be complicated, but the basics we can knock down in this my 30-second elevator pitch to three things. One, you can't use your IRA to buy, for instance, in real estate. You can't buy a property you already own. Right? Once you've owned it, it's off limits. And even if you've owned it once and sold it to someone else or a bunch of other people, you still can't use your IRA to buy that property and invest. That's number one. Number two is even if you'd never owned the property, you can't make personal use of it. That's what we've been discussing. You can't live on it, even for a night. I had a guy that interested in he was in the East Coast and he wanted to buy use the IRA to buy a ski resort out in Colorado. And he loves skiing, but he was going to live on the East Coast, and only one weekend per year he wanted to come out west to ski in his lodge that his IRA would own. But I told him this: if you even one weekend a year, even one night a year, you would not be able to use the lodge, for your personal use. You can go down there. He could go down there and talk to the manager and make sure that everything's okay. He can do what we call desktop managerial type responsibilities. He can, collect the rent and make sure the gardening is the way to his liking. He just can't do manual labor. He wouldn't be able, whether it's a ski resort or a home investment home, you can't pick up the hammer. You can't be the plumber. You can't be the repairman. You have to outsource that to someone else. But you could be the manager who collects the rent, who talks to the renters, who talks to the different, people that are repairmen and plumbers and stuff like that. That you can do. So again, I'm still doing the prohibited transactions. The three are: you can't buy a property you own. You can't use a property even if you never owned it for personal use. Managerial use is fine, but personal use, no. And the third thing is something called disqualified persons. Disqualified persons are people other than yourself that you can't interact, your IRA can't interact with. So that would be, for instance, you and your spouse. If your spouse owns a home, your IRA can't buy it. If it's children or grandchildren and their spouses, also off limits. Parents and grandparents are off limits. Basically, lineal ancestors and descendants, the vertical ancestors descendants are off limits, but interestingly, people say relatives you can't. No, you could. You actually could invest in your brother or sister or siblings IRA. Uncles and aunts are in play. Cousins and nephews and nieces, all in play. Those are good. They're not prohibited by the IRA, but only the lineal ones are prohibited. Anyway, so that's the gist of the plan, how it works, and the prohibited transactions. And I just want to go to one other common topic here that people talk about, and that is especially at the end of the year, we're getting a lot of requests about can we set this up as a Roth IRA, and especially in cryptocurrencies. The cryptocurrency, so just as an aside, the cryptocurrency, I had a client that I signed up in April 2016, had $92,000 in Roth, and he plunked it into some Ethereum, which is one of the second most popular cryptocurrency, and it was a Roth, and 14 months later he pulled out $1 million tax-free. So that's the power of a Roth plan, and we have lots of clients using it for real estate. The Roth is money that you pay taxes on now up front, and the government is happy to take your money, of course, whenever. But they'll even reward you if you give them the taxes now in an IRA or 401k, rather than when you retire 10, 15, 20, 30 years later. And that converts your money into Roth, and that means your money is not merely tax deferred, it's tax free. The one on the left there, the traditional funds, that means your money is tax deferred. So you buy the property now, you collect rent, maybe you sell it, you make a lot of money, and all the money goes back into the IRA LLC and grows tax deferred. Now you only pay the taxes when you retire. At 70 and a half, you have to take out what's called required minimum distributions. That depends on your age and different factors, 2%, 5%. You've got to take out a little bit every year. If it's tax deferred, then you pay the taxes, and you only pay the income. It's treated as income tax. If you take out, for instance, $5,000 of RMDs, the required minimum distributions, now that $5,000 is treated as income, so it could raise your tax bracket, or it may not. That's the advantage, by the way, of a traditional IRA investing. People ask this question. Even if it's tax deferred, it's still an advantage because usually, presumably, at a later stage, you'll be in a lower tax bracket, and you've made all these gains over the years, and now you're paying less tax. There's other advantages to the tax deferred plan. We can discuss that. But the Roth, again, is even more so. It's not just tax deferred, it's tax free. And the common question people ask is, does that mean my principal is tax free or also my profit? And the answer, the good news is, in a Roth, even the principal is tax free. The principal is tax free and also the profit. So this fellow that, and again, it could be in real estate, this fellow that took $92,000 of Roth and turned it into $1 million within 14 months, and I've had people do stuff like that in real estate, not quite that, but they've done really great returns. But not only for this fellow did the $92,000 be tax-free, but the other $908,000 came back tax-free. So that is really the power of the Roth. I mean, if you read some of these books, even Tony Robbins has a book on finance. The really wealthy people know what a Roth is and understand its principle, how to make it, to their advantage. If you can do a Roth, it's fantastic. Why don't most people don't? Why don't they? Because it means you have to pay now, and I don't have the money now. Or maybe you're in a tax bracket that's going to raise your tax bracket. Or maybe you're making too much money. There could be a lot of reasons why you might not. But if you can, it's certainly something I would recommend looking into. We're not investment advisors. That's an important thing to mention here at Broad Financial. We're offering you the vehicle. I can't tell you if Roth is better for you or not, if it's even valid for you. But if it is, it's certainly something worth thinking about very strongly. And then just to go about, Broad Financial, what our plan is, we have no asset-based fees, as I mentioned earlier. So again, if this guy made $1 million, he still paid the flat fee of $196 per year. That's what an IRA to maintain is. We'll talk about the fees in general. All right, we'll talk about it here. So there's no asset-based fees. It doesn't matter how much you make. I actually had a guy recently just signed up, and I don't want to go into cryptos again, but he took $300,000 in 2013, put it into something that tracks the Bitcoin price called GBTC, and now in 2017 he pulled out 17 million, quite amazing, and he wanted to use 7.5 million of it now. So that we don't care we care, but it doesn't change our pricing. He puts in $7 or $17 million. It's the same ongoing fees for us, and it's the same flat setup fee. For the IRA, we can go into this in general. Basically, in most states, 43 of the states, there's a flat one-time setup fee of just above $13.95. There's also a one-time $100 fee for the custodian. Grand total one-time setup would be $14.95. In 7 states, New York, California, Illinois, high tax states and LLC cost states, it's $300 more, $16.95 plus the $100. And that's it. It would be either $13.95 or $16.95 and $196 per year to set up the plan. A solo 401k, which is actually a better plan if you qualify, costs less, $11.95 once and $139 per year, and does everything that I described about the IRA plus some extra things. A solo means in an IRA the most you could contribute on a yearly basis is $6,500. In the solo 401k, it's 60,000 potentially. Solos can potentially be set up with husband and wife sharing one plan. Solo has the potential to simultaneously hold Roth money and traditional. If you want to do an IRA, you have to have two plans. If you want Roth and traditional, can't hold both, and so on and so forth. And the only qualification for solo, though, is that you do have to have some self-employment income. Doesn't have to be a lot, like 500 to 1,000 per year, but no full-time employees. If you're not sure, you can call me or email me, and we'll discuss the details. But that's the advantages of the solo. But in short, both our plans, the self-directed IRA and the self-directed solo 401k, are flat setup fees and flat ongoing fees, and they give you total control that we've been discussing to invest in all these things we've discussed. Just a little plug here for Broad Financial. I am proud of being part of this company. It's not my company, but we have an A+ with the Better Business Bureau. We've always had an A+. There are some companies out there that one of the infamous ones got an F and then lost their Better Business Bureau BBB rating, and then they bought another company that had an A+, and for a while they had an A+ till they ruined that also. Anyway, we've always had an A+. And it's because our business model, we're invested in keeping that A+. It's good. We're good people, and we want to do that to help people, but it's a business, but it's good for business to have an A+. So therefore, we do invest in our customer service. We train them, and we're expanding now, actually, but customer service. So the A+ is not just the window dressing here. It might even be the most important consideration when you go out there, because there are other companies. But Broad Financial, we're a leader, and we have an A+. We always have an A+. So we're invested in you using the plan legally and happily. That's the middle one, stellar reputation for customer service, and you get lifetime, totally for this customer support we're talking about. It's lifetime, it's toll-free, and totally free. Yep. The setup fee that we discussed, $13.95, or $16.95, or $11.95, that includes automatically lifetime toll-free customer support. And it's an IRS compliant plan. I guess that needs to be said, even though it doesn't really need to be. Of course, we started this company. The owners started this company in 2009. Actually, they did it for themselves. It's an interesting little story here. You know, in short, there's a few owners, and one of them lost 40% of the retirement funds that were invested in Wall Street. When these guys knew about real estate, and they asked themselves, what are we, crazy? Why are we invested in Wall Street when we know real estate? And that's when they discovered these plans for themselves and approached attorneys and created the plans from that ground up for themselves. So all our plans have been vetted through what are called ERISA attorneys. ERISA, E-R-I-S-A, is the specialty in the law field that specialize in retirement funds. So all the plans are IRS compliant. We can produce some letters and information about that if someone's interested. And again, we've been doing it since 2009. We have clients in all 50 states, Hawaii, Alaska included, which also reminds me of something I forgot to say about real estate. And this is a question that's more common than you might think. People ask, can I use an IRA, your Broad Financial IRA, to invest in a property overseas? Belize, for instance, is very popular for some reason. Costa Rica, Mexico. People are buying properties overseas. Can they do it with an IRA? And the answer is yes. You can only do it with the checkbook plan, not the custodial plan. You can talk to me about details, but properties overseas are in play. So I don't know if that's what Home Investors is offering, but if you did, Nate, that's an opportunity to use an IRA. So in short, I think that's my pitch. I think there's only one last thing I wanted to say before I'm going to hand the mic back over, and then Nate can talk and we can have questions. I just wanted to mention briefly the structure of how the how the IRA works. I mentioned there's something called a checkbook IRA, and the way you get that checkbook control, that wonderful checkbook control, I mentioned briefly, is through the creation of a specialized LLC. We call it an IRA LLC because this is an LLC that can hold IRA money. Normally, LLCs can't do that. So we create this, ERISA compliant, this IRS compliant LLC. We send it to you. All you have to do is walk into a bank and set up an LLC account. In fact, you don't even have to mention to the bank that it's anything to do with an IRA. From the bank's perspective, all you have to do is setting up a regular business account, which is what an LLC is. We've done all the back work about the IRA part of it, and the bank doesn't have to do anything with it. So you go to the bank, set up the LLC, then we connect you with our sister company, Madison Trust. That's the custodial arm of it's really Madison and Broad are two separate companies, but we work hand in glove. So after the LLC is set up, we get you some Madison trust paperwork. You tell them where your money is, how much you want to roll over. Do you want to make it Roth or traditional? And then Madison will do the rolling. When Madison does the rolling, it's called a trustee-to-trustee transfer. That's what we call it's a non-taxable event. That's what we call a direct rollover. There's something called an indirect rollover people ask about, and that's different, that you have 60 days, and they may take out taxes initially. But we do a direct rollover, and about 2 to 3 weeks later, your money now is at a bank of your choice, and you can simply use that account as you would normally in real estate, buying the property, paying the bills from there, depositing rent checks into there, even proceeds from a sale, all under the umbrella of a tax-sheltered IRA. If it's traditional, it's tax-deferred. If it's Roth, it's tax-free. That's the self-directed IRA. The solo 401k is similar. Instead of an LLC, we create a trust. There's no custodian in the solo 401k, which also reduces the cost and makes it quicker. You're your own plan administrator. But the bottom line is that your money is going to be at a bank of your choice. You don't need to go through a custodian. We have neither us nor the custodian have any knowledge or control over it. And now you go investing, and you have questions, you call us up. So I think I spoke a lot in about 30 minutes or 20, 30 minutes. I did my New York speeding talk here. I apologize. If you did notice, I do have a New York accent. I try to hide. I really grew up in the Deep South with a Southern Belle accent. No, I'm kidding here. But that's New York joke. But I did speak fast, so I'm happy to chat with people. You can email me. I can send you more information. You can go to the Amazon and download this book, and really in a couple hours you'll really be up to speed. And I'd be happy to chat with you if you have questions. But that's the gist of it. It's really wonderful, and to have a company that like Home Invest and some of our clients are already there. It's a nice combination. If you know real estate, if you don't know real estate, they can help you, and combined with our plans, IRA or 401k, you can do it in a tax sheltered or tax-free way. It's one of the big secrets out there. One last point here, and this is number chapter 2 in my book, is why haven't I heard about this before? Is it legal? So yes, it's legal. Why haven't you heard about it before? There's about $20 trillion of American retirement funds out there. I've heard as high as $24 trillion. About 98% of it are in regular Wall Street brokerages, or that type of brokerage, in the hands of somebody else. And the majority is not in these self-directed plans. And why is that? Because most people don't know about it. And why don't they know about it? Because those who are holding people's IRAs are not invested, don't want the others to know necessarily that they could move their money out of their hands and their commissions and self-direct by itself. So that's chapter 2 in the book. It is a good big secret. Now the secret is out. Spread it. Please spread it as far and wide as you can. But it's a wonderful tool combined with your knowledge of real estate and the knowledge that the people at Home Invest can give you. It's a wonderful way of really both increasing potential returns on real estate, and real estate is a tremendous hedge even in a down market. Worst comes to worst, the value may go down, but the property is real. That's what it is, and eventually it'll come back up. So a lot of advantages to real estate. That's Nate's side of the equation. My side is the IRA. Be happy to chat with you. You got my number down there in the bottom corner, or email me, jeff@broadfinancial.com. I'll be happy to take it from there.